Hello Wolfpack, the market is heating up as we go into this interest rates decision. As you guys would know, or maybe you don't, the FMOC Federal Reserve's meeting is going on in about 12 hours, maybe a little bit more than 12 hours, maybe 16 or 18 hours, depending on what time this video gets out, to be honest. And that will be leading into most likely a 50 basis point rate hike, in my opinion. Now, that's not public knowledge. That's not really a given, but it is my opinion that it will be a 50 basis point rate hike, and the market has kind of priced that in a little bit, in my personal opinion as well. And so there is going to be volatility coming on when that decision is made, just as there was last month. Now, you remember last month when that decision was made about interest rates, or the month before, I should say, there was some volatility in the market, there was some irrational price action, and due to that reason, it's very hard to predict the short term unless we know exactly what's going to happen with the rate hikes, which in reality we don't. But what I can be sure of is the fact that there will be that volatility, and what I can be sure of is that the short-term price action is extremely difficult to predict right now. But the main part of the video that I'm trying to get across to you this video is the fact that, well, that decision could very well push Bitcoin, and it probably will push Bitcoin either out of this descending wedge to the upside or to the downside out of this descending wedge below 37k. And so the critical level you need to be watching as we go into this interest rates decision is for sure 37k. That's not only present on the daily chart through this uptrending line, that's also present on the monthly chart and on the 3-day chart and on the weekly chart through their own respective dynamic support zones. And so now it becomes very tense, and it becomes a waiting game as to what we're going to see with that interest rates decision. Before we get into the rest of the video, and there is a lot to talk about in this video, we're going to take a look at the BitGet Exchange. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian, because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. Okay, so let's dive into the daily chart a bit more here. As I've just said before, we have a descending wedge structure, which obviously is a bullish structure. It breaks the upside about 68% to 73% of the time, according to some studies we've done in the Crypto Academy. However, we do also have a bear flag breakdown, and that's how it's getting complicated. As I've spoken about before, it's very unusual to form a descending wedge right after a bear flag breakdown. And that is a confirmed bear flag breakdown, though, by the way. We did not only did we break down, but we broke down, came back up, and rejected from resistance, which means we formed a perfect resistance support flip. A little bit of a messy one, but it was perfect nevertheless. And hence, we should be going down, accelerating downwards further. But the descending wedge formation really does display the fact that, well, the market is in a bit of an unsteady position right now, in which both the bulls and the bears are easily flip-flopping between one argument and the other argument, and so there's no clear decisive direction for Bitcoin as of current. And this is why the interest rate decision is so critical, because people are generally speaking, waiting for the interest rates decision before they make a decision on what's going to happen for the rest, the rest of the month, until the next decision. And that kind of explains, in my opinion, why we see this stagnation in the market. Now, we saw the same thing in the S&P 500. All the way back up here in January, you had the same kind of occurrence, right? We had a stagnation all the way through from probably October all the way through to January, which is 3 months, a long time in the S&P 500, especially considering it was just in an uptrend for like 2.5 years. A stagnation. Why was that caused? Because interest rates decisions started to be a pressing matter. They started worrying about these interest rates, worrying about whether the government was going to raise them or not, the Federal Reserve was going to raise them or not. And so now we're seeing the same thing on Bitcoin, where we have this stagnation, a slow downwards grind as people just wait and see what happens. That's why I think that this interest rates decision will be the driving force of whatever the next trend will be. Now, personally, I think that trend will be downwards in the longer term. Shorter term, I don't know what's going to happen. I've been public about that. I don't actually really know what's going to happen in the short term here, due to the fact that it is a confusing structure in terms of the data, right? Let's look into it a little bit. Stochastic RSI is showing us nothing too important. The RSI itself is showing us a slight bullish divergence, which is good. And the MACD is showing us, the potential to see a bullish cross. However, it's just flattening out. It's not really showing us anything, right? It's neutral. And so when we look into the bear flag breakdown, well, that's obviously bearish. That's easily targeting the 20k region, the 20k's region, I should say. And then, when you look at it like that, it's like, well, it's bearish. And then all of a sudden you get this descending wedge out of nowhere, which is a bullish structure, and it just overcomplicates things even further. And then even to overcomplicate it even more, we've got the 50 SMA, the Ichimoku Cloud, the Gaussian Channel, the bull market support band, the 75 SMA, and the 21 SMA, all within a $2,000 price region between around 40K and around 42.5K, right? So we have a bearish breakdown and then a bullish structure into the bearish breakdown with bullish divergence. And then above us, we have literally every single resistance zone you can think of. So how are you meant to logically predict the shorter term price movement? You genuinely speaking, you just cannot, right? There's no logical way to predict the shorter term price movement right now in Bitcoin. It is simply one of those situations where you should just be sitting back and waiting to see what happens, right? Or it's only going to take a maximum of like 3 or 4 days. And so we're not really missing out on anything too much in terms of trading. But the best thing to do when the shorter term is unclear is to look at the longer term, and that's what we're going to do right now. Now, I've spoken about a lot of this stuff before, so I'd highly suggest if you have seen some of my previous content, you might want to consider skipping forward. However, there are a few new things we need to talk about, one of which being the RSI and the monthly. We haven't actually talked about that before, but if you notice I'm covering some information you've heard, feel free. So this is very, very important chart though, right? I've only spoken about this like once or twice. It's very, very important. It's actually, in my opinion, one of the most important charts we have on Bitcoin. As I spoke about yesterday in yesterday's video, 37K, not only as seen by the daily chart, but also seen by the monthly chart and the 3-day chart, which we'll look at soon. 37K is by far the most critical zone on Bitcoin that we've seen since 53K all the way back in December, right? 37K is a reversal zone. Inherently it is. Do I think we'll reverse there? No, I'm bearish on the market. I think we're going to go down to 24K at 200-week SMA, and I've been saying that since 58K, originally bearish at 66, okay? So I'm saying it for a long time. I was one of the first to say it. I think we're in a bear market. I think we're going further down. I still think that. However, I have the objective mindset and the objective, capabilities to view 37K as a prime bouncing zone. Why is it a prime bouncing zone? All we need to do is look at the monthly chart and we can see that the 21 EMA, right? This pink line, the 21 EMA on the monthly chart is sitting at 37K, right? Let's look historically what's happened in regards to the 21 EMA. Every time we've lost it, right, and we've only lost it on 3 separate occasions, we have seen a swift 50% correction on the 3 occasions we've lost it, right? And then every time we've gained it back, we have seen a swift minimum 200% pump up to like 30x. Okay, so we've interacted with this on 6 occasions, and every single time we've interacted with it, it has led to a massive move in the given direction of which it's jumped above or jumped down, right? So this is a absolutely phenomenally critical line, right, that we need to hold on Bitcoin if it's going to be bullish. Now, if we lose it, that's immediately bearish, and that's an immediate cause for an immediate correction on Bitcoin. You can really see how stern this line is being. The amount of support and resistance it's given over the long periods of time is crazy. I mean, we had 3 months of resistance here, bounce off support, 5 months of support before dropping and acting as resistance here, support here, and then 4 or 5 months of support as of recent, 4 months of support as of recent, crazy amount of support, very, very strong zone, very, very powerful zone, very easily can keep the price up, above that line or very suppressed below it. And so that's why it's so interesting right now. If we get this next monthly candle close below that line, or not even that, we could just drop below it for an extended period of time. That's a very good indication that this bull run, it's not even a bull run anymore, this bear market, I should say, is very much accelerated. Now, again, I've been saying it's a bear market since 58K. That was a mishap in my speech there. But looking into things like the RSI and the MACD and stochastic RSI, we can get an indication of what's really going to go on here. And what we can actually see, for example, in the stochastic RSI is that the stochastic RSI has bottomed out. And this is what I was looking at yesterday, right? There is a little bit of evidence to suggest that, hey, maybe we do hold this line. Because, by the way, if we hold this line, that's very bullish, right? That's a good sign. If we bounce off this line strongly, break above 47K, right, which is a 200-day SMA on the daily chart. If we break above 47K, Bitcoin, in my opinion, is bullish again. However, until we get above that, there's no reason to change the opinion that's in a bear market. Okay, so if we hold this line, break above 47K, that's great. However, it seems unlikely because the stochastic RSI, unfortunately, although it is bottomed out, look at what other times it was bottomed out. It was bottomed out all the way in 2014, April, but we only bottomed out in, a year later after that, and we went down a further 50%, and it was still bottomed out, right? Same thing with when it was topped out. It topped out in December 2015, but we didn't even top out on Bitcoin until December 2017, right? So it's very unreliable, unfortunately, and so it's not a very strong piece of data. Now, moving on, what we can see, and this is a trend that I really like to look at, I think it's very interesting, is that every time we see a bearish MACD cross in this chart, let me just get my camera out of the way. Every time you see a bearish MACD cross on the monthly chart, right, and this is going all the way back to 2014, we end up touching 43 on the RSI. It's only been 2 occurrences, but it's very coincidental. That would be a massive coincidence if it wasn't actually a trend, right? So we saw a bearish MACD cross within months. We touched 43 on the RSI and bottomed out in the price action, right? In 2017, same thing. We saw a bearish MACD cross within months, within the same amount of months actually. We touched 43 again, right? And now we've seen a bearish MACD cross, and then on paper, right, much like 2018, 2014, on paper, within months, we should be seeing 43 on the RSI being touched, just like we did last time. There is a trend forming there, and it's not a very good trend. So now that we've established the monthly chart is very important, now we've established 37K is very important, right? It only increases how important this interest rates decision in 18 to 16 hours is, right? Because, the volatility given by that decision could very easily push the price below 37K. We're only hanging on to 37K by a 2% thread. It's not really much in the way of us and losing that level. And if we do lose that level, it could very, very easily toss us into a May correction, as I've suggested multiple times in the past. So let's look into some more data regarding a May correction. So firstly, we have the 4-year cycle. Now, this doesn't specifically target a May correction, but it's very important when considering a May correction because it does confirm our suspicions that the bull market is, in fact, very far over. In fact, it was over at the top, obviously. At November, middle of November, you can see that this 4-year cycle trend, and you can go ahead and pause the video and read the color-coded boxes and establish the trend for yourself. I'm not going to go into it too deeply here, but essentially there's a trend where there's 1,400 days from top to top in each cycle, 1,400 days from bottom to bottom in each cycle, and then a similar amount of days from top to bottom in each cycle, and all of that points to the bottom being at the 200-week SMA at around 24 to 26K in November to December, right, this year. Okay, so very complicated. You can pause the video, look into it, and you can pretty easily identify it with just your eyes. You don't need me to explain it to you. It's just a trend revolving around date ranges, and what that tells us about the future is quite clear on Bitcoin, right? The 4-year cycle is very much alive. It has more evidence supporting it than ever, and I would say it's not a coincidence anymore. It is very much a trend. Even by the definition of a trend is something in which 3 data points, at minimum 3 data points exist to connect what is going to happen in the future. We have that on the 4-year cycle now. We didn't have that in the previous cycle, hence it was just speculation back then. Hence why everyone called it a 4-year cycle theory. It's not a theory anymore, it's actually a trend. So the 4-year cycle trend is suggesting that the top is in for Bitcoin and we head downwards. It's just a matter of when we head downwards. Now, obviously we have a bottom prediction of November to December. However, that's pretty rough, right? It is a trend, but it's not exactly a precise trend, right? It doesn't show us exactly when the bottom will be today, right? We've got a few months to work with here. And so we could very well see a major correction in May this month, as I've suggested multiple times in the past. And I have suggested also multiple times in the past that I think it's pretty likely, right? I never said it was certain. And I never said it was, a major part of my prediction. Again, the major part of my prediction is Bitcoin goes to 200-week SMA, right? But what I have said is that it's relatively likely we see a major correction begin in May, and it's relatively likely we see a 30K Bitcoin by early June, right? That's what I've said over and over again. Now, I don't want to, again, just making it very clear, my main prediction is the bottom prediction, but this is something to look into. There's a lot of evidence supporting it. So let's look into it, right? 30K by early June. You might think, wow, that's a big drop. That's a big drop downwards. Not necessarily. It's only, 25% drop. I'd say that's a major correction, of course, but 25% drop in about a month and a bit, that's not a long time, but it's definitely possible. And given the fact that we've been kind of compressing and consolidating for so long on Bitcoin, and the Bollinger Bands on the weekly chart especially just show you like how primed and how coiled up for a move this is, I think it's very, very possible here. So, for example, here's the first piece of evidence. Every time the 50-week crosses underneath the 75-week, every time the red line crosses under the blue line, we are in the midst of a major correction on Bitcoin, happen on 2 separate occurrences, and guess what? Those lines will be crossing with each other in about a week's time on the next weekly candle close. So that is one piece of evidence. The second piece of evidence is the fact that the Gaussian channel has only flipped red 2 times in Bitcoin's entire history, right? The Gaussian channel will be flipping red most likely next week. Okay, the last 2 times it flipped red, we saw a 50% correction in the weeks it followed, and if that is anything to say about it, we will be seeing a major correction in May. Now, third piece of evidence, as we just brought up, was the fact that the Bollinger Bands are very tight and very, very coiled up, and we'll look into Bollinger Bands right now. You can see that. Let me actually just delete one of my things. I think my Pro might have expired here. So the Bollinger Bands are very coiled up, as you can see here. And the only time that really happens is before a major move. It represents compression in the market. It's like holding a beach ball underneath the water in a swimming pool, right? You can hold it down for a certain period of time, but when you let it go, it comes up, and it doesn't only just go up to the top, it actually jumps out of the water. It's like you're holding the market down for a period of time, and these bands are getting closer and closer and closer. They're compressing more and more and more. There's more pressure building up, and when you let go, all of that pressure has to go somewhere, and it just explodes, either up or down, and that's what that kind of represents there, the Bollinger Bands. They are very compressed. They are primed for a move. Bitcoin is primed for a move. This compression period is coming to an end, and there will be a decisive move out of this region very soon. Now, the question is whether that's going to be up or down. I would argue it's going to be down due to more evidence that I'm going to show you right now. Third piece of evidence, fourth, it depends what you want to define as evidence, but I would say this is one of many pieces of evidence, because you can even call the bear flag evidence as well. But one of many pieces of evidence is the fact that we have a trend occurring with the def crosses on the 3-day chart. A def cross occurs typically when the 50 SMA crosses underneath the 200 SMA. Okay, this is the 50 and the 200 on the 3-day chart, the 50 in red, the 200 in green. You can see the only other times that we have had a def cross here is in 2014 and 2018, only moments before a major 50 to 40% correction in about a month and a half on both occurrences. Guess what? The def cross will be occurring in about a week's time, right? Not very long at all. In about a week's time, we'll be seeing a def cross, and you can see that it's very well going to happen, because we've actually closed 3 separate 3-day candles below the 200 SMA, lost that critical support level, and Bitcoin hence is definitely going to be entering a massive, well, not definitely, but very likely going to be entering a massive downwards trend starting shortly, right? In about a week, I'd assume it is going to be starting. So there are many, many pieces of evidence, as we've just looked at, that would suggest there is going to be a major downtrend this month. Another piece of evidence is the fact that the total cryptocurrency market cap has lost recently a major level of support, right? This uptrending level of support that was first formed on December 2020, we held it throughout the entire bull market, and we've actually recently lost that by a candle close. Not only have we lost it, we've dropped below it, we've come back up, rejected, and we're going back down again, which is a resistance support flip. And not only had we had a resistance support flip, we've also seen, unfortunately, an evening star formation, or some sort of something similar. I guess you could call it a spinning top formation, but it depends what you consider this downside wick to be. Looks to me like an evening star formation, which is a bearish candlestick formation there. That would suggest that upwards trend is over, that short-term upwards trend is over, and we need to be heading further down. So again, we have a trend going on the weekly chart with the 50, the 75, and the 200. We have Gaussian channel on the weekly chart. We have the Bollinger Bands compressing. We have the def cross on the 3-day chart. We have a bear flag on the daily chart. We have the 4-year cycle calling for a bear market, since the high 60K region. And we also have that monthly chart that I've just deleted there in regards to the 21 EMA holding 37K. So I suppose all of this goes to say, it doesn't necessarily go to say we're confirmed, we're going downwards in May, it's confirmed. It goes to say that if we lose 37K, you can pretty well put your bottom dollar on the fact that 30K will be coming within a month of that happening. Okay, that's what it confirms. So I want to make that very clear. If we lose 37K, you can put your bottom dollar on the fact that 30K will be happening within a month or so of that happening, right? So 37K is very well the critical region, very well a defensive wall that is built by the bulls here. And going into this interest rates decision, it becomes a big question as to whether we can hold it or not. Speaking of interest rates, let's move into the traditional markets here and get a bit of a deeper look. But before we do that, I want to talk about the Crypto Academy. Now, if you want to learn how to trade, you want to learn how to analyze the market, you can check out the Become a Trader, a 10-unit course made by myself and Megawell Crypto, which is another analyst in the space that I work with closely. This course basically teaches you from the fundamental principles of cryptocurrency to the most advanced parts of trading through 10 units. As you can see here are the unit titles. First unit, fundamental cryptocurrency concepts. We then go into basics of technical analysis, market patterns, indicators, candlesticks, mindset, advanced risk management, how to find trades. Everything you need to know about trading is in this course. Go ahead and send us an email at the cryptoacademycourses@gmail.com. I've just highlighted the email address there. Again, that's cryptoacademycourses@gmail.com, and you can find out a bit more about the course. We'll send you what it looks like itself and also the pricing details of the course, and you can make a decision from that point. Chuck us an email and we'll be sure to get back to you if you have any questions. Thanks. So straight off of that, let's go into the DXY. right? What is the DXY? The DXY is basically a chart that measures the strength of the US dollar in general and in relation to other global currencies and assets, right? So this chart going up means the US dollar is getting stronger. US dollar getting stronger means traditional markets go down. Traditional markets go down means Bitcoin goes down. That's how the current trend remains. So this thing going up is bad for Bitcoin in a simpler term. And this thing is going up. I'll tell you that much. It's breaking out massively. It's broken descending wedge to the upside. It's broken a 21-year triangle formation, as you can see by the weekly chart, to the upside, which is astonishingly bullish for this chart. Bearish for us, but bullish for this chart. And then also it's coming up right now on major resistance. And this kind of makes it a bit more intense, with the interest rates decision right now. It's like, makes it more intense because the DXY is at resistance. And depending on what happens with that interest rates decision, it could reject. Now, interest rates rising generally is bullish for the dollar. Why? Because people like de-risking from risk-on assets during interest rate hikes because the market gets a bit more, choppy. And so, when we see interest rate hikes, people sell their assets for dollars and hence the dollar gets stronger. So on paper, this thing should break upwards. I mean, fundamentally speaking, this thing should break upwards and that should basically give more weakness to Bitcoin and more weakness to the S&P 500. Now moving on, we have bond yields and then we can look into interest rates and how this affects and how bond yields affect interest rates. So bond yields are skyrocketing going into the interest rates hike, which kind of gives us a great indication of where they're going to be going, right? Bond yields kind of predict where interest rates go. Bond yields are basically rewards given by the government, yields given by the governments to people who purchase bonds, right? So the more unstable an economic market is or the economy is, they'll give higher yields to compensate. So it's like risk for reward. You're trading off risk for reward. They're giving you more reward because you're taking more risk by buying into the government at that point because the economic time is the economy is weak or whatever, right? So essentially what we can do is we can get a pretty good idea of where interest rates are going based off bond yields. Bond yields have returned to levels we have not seen since June 2019. Interest rates in June 2019 were all the way up here at, let me get my vertical line out, 2.5%. You can see interest rates now are only 0.5%. Using this as an indication, we can see that interest rates are critically undervalued right now, and there needs to be many, many, many more rate hikes until bond yields stop going up. And then at that point, we can kind of get an understanding that interest rates may have topped out, but at this point, they're skyrocketing, right? So bond yields are suggesting interest rates need to go up a lot more, and bond yields are suggesting that interest rates are 2% undervalued, which means there needs to be dramatic rate hikes to catch up the market with the bond yields, right? So under that logic, I would assume a 50 basis point hike, which is probably the most the government has ever done, right? I don't think they've done any more than 50% ever before. Maybe they have, I'm not sure. 50 basis point is a pretty high hike though, because you usually get 25 basis points. So I think that the government will go in strong here, or the Federal Reserve will go in strong here and raise the rates by 50 basis points. And that could do anything to the market, right? But what it will do for sure is raise the DXY, possibly past resistance, which will be bad for Bitcoin, bad for traditional markets. And, as to the question, well, is it priced in? It's very, 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 very hard to tell. I think the bond yields have priced in an interest rate hike. However, we are critically undervalued on interest rates still. And the S&P 500 doesn't just correct like this for no reason, right? It's obviously trying to price in interest rate hikes. Is it priced in is a very complicated question that involves, many, many, many hours of studies on macroeconomics. I don't have that study behind me. I don't think many people do in the cryptocurrency space. And so I think that the best thing we can do as investors, I'm not going to bullshit you guys, right? That's what it boils down. I'm not just going to sit here and tell you I know if interest rates are priced in the market. That's a very complicated question that should be reserved for, economists, right? I'm not an economist. I'm just a dude on the internet. Let's be real. So I'm not going to answer that question. But what I can say is that last month, or the month before last, when we had that 25 basis point hike, it was priced in because it bottomed out on the day that the interest rates were hiked, and we pumped after that happening, right? So the market's only gone down a little bit more than it was in that 25 basis point hike. It's basically at the same level. I would say due to that it's very hard to believe that it's priced in, right? You'd assume if interest rates were going up further, the market would be further down if you said it was priced in and then don't do something like this. But the market's at the same level it was before that 25 basis point hike. And so I find it hard to believe that it's priced in. But again, I don't really know much about the short term right now. And so we're just going to move on to the questions from the Wolfpack. But before we do that, quick summary. 37K is critical for Bitcoin. We need to hold that going into the interest rates decision, and it's very likely that the interest rates decision in 18 hours will determine the next trend direction for Bitcoin. We might lose 37K, or we might jump back up within that daily channel or bear flag formation, and that would be a good step in the right direction for the bulls. So let's see what happens. Very tense time in the market right now. I would lean towards bearish, but we need to see what happens. All right, so let's get into some comment questions right now. Okay, so first question's from Killian. He says, "Hey Wolf, thanks for your TA, no problem. I'm glad you enjoy it." He says, "My question: between 2015 and 2018, the Fed was raising rates, and BTC still made a new all-time high. So again, between 2015 and 2018, they were raising rates, but Bitcoin still made an all-time high." So he's referring to the fact that, well, I've said in the past that, you know, if rates go up, it's bearish for Bitcoin. So why did Bitcoin make an all-time high when rates were rising? So let's go ahead and look at the rates in 2015 to 2018. As you can see, they were rising. He's not lying there, right? However, I would say that they weren't rising nearly enough, and the traditional markets were still going upwards during that time, right? The difference between now and then is that interest rates were rising in a time in which we saw relatively low inflation. Right now, we're seeing interest rates rise in a time in which we're seeing very high inflation after a significant market pump, which is very similar to a bubble, right? See in 2015 to 2018, let's go ahead and take a look at that. So this is 2015 here, right? 2015 and 2018, right? Interest rates were going up while the traditional markets were going up. We saw very minimal corrections, right? And we saw very low inflation during that time period with very little risk of recession. There was no economic recession during this time period, right? Right now, there is a massive argument to be made that there will be an economic recession. Yield curve inversion is in play, right? And traditional markets are dumping massively. You know, inflation's very high. Interest rates are dramatically undervalued at this point. As we just looked at on the bond yield chart, interest rates right now should be at 2.5% according to the bond yields. Interest rates right now should be at the peak of what they were in 2018 according to bond yields, which kind of gives us an indication that they should actually be higher than 2.5% in the future, because bond yields aren't just going to stop going up now. So again, I think it's a question of severity, right? I would argue that interest rates are going to go up dramatically more than where they were in 2018, right? And given the inflation, given what's happening with the housing market and the amount of people taking out credit card debt and the amount of debt the government has, that's way more extreme than it was in 2019. And so the average person and average institution and company is going to be much more impacted this time by interest rate hikes than they were in the past, because their general personal finances have been weakened, especially in the question of the everyday consumer. When everyday consumer has finances weakened, we have less disposable income to spend because they're spending more on mortgages, credit card, car debt, etc., things like that. They're going to have less money to put in Bitcoin, right? That's just as simple as that. So I would argue it's a question not necessarily of comparison. It's actually a question of severity, right? It is more severe this time. And there's more evidence to suggest that, unlike last time, it won't be so quickly solved, right? That's the big difference there, in my opinion. So moving on, mid-bell, great video as usual, Rolf. What are your thoughts on the post-Fed meeting rally? So I spoke about this briefly. He's basically asking, are rates priced in, and what will happen after the rally? Now, again, I kind of answered this question in the video, and I kind of forgot that question was there actually, but I've answered it in the video. I'm not exactly sure what's going to happen afterwards. What I will say is that if I had to predict, and again, I don't want to predict things like this, but if you force me to predict at gunpoint, I would say that it is not priced in fully at this point, simply based off common sense. How can it be priced in when we're at the same price before the last interest rate hike as we are now, going into a 50 basis point hike, the first 50 basis point hike in 20 years. It seems illogical to think it's priced in to me. So I think we've got some further downside to go on the S&P 500, which means we've got further downside to go on Bitcoin. We'll lose 37K. If I had to lean towards an option, that's what I'd lean towards to. So love the content, Wolf. Keep it up. What's the chance of a live stream with the FMOC meeting? So he's asking, what's the chance of a live stream tomorrow as they raise those interest rates? Now, I won't be doing a live stream when they raise those interest rates because it's happening at like 4 a.m. in Australia. But I'm very seriously considering doing a live stream tomorrow at around 10 a.m. to 11 a.m. my time, which is basically an hour before this video came out to you guys. I'm not exactly sure what the conversion is there to US time, but you'll see if I'm going to do a live stream, I will have a notification there that Wolves of Crypto is going live at this time. It's going to be about 10 a.m. to 11 a.m. my time. So the same time this video comes out tomorrow, I most likely will be doing a live stream. First live stream in about 2 months. So I'm excited to see how it goes. Now in the live streams, what I usually do is I usually go in there, analyze Bitcoin, analyze everything I usually analyze like a normal video, and then I stop, and then I read out all your questions. I answer all the questions you guys have. I look up altcoin charts that you guys want me to look at, everything you guys want. and then I'll sign off when that's done. So if you got any questions, come and join me in that live stream. Most likely going to be doing it. I'll try set up a link there before this video comes out, so I can just put it in the comment section below, and you can, turn on your notifications and come join me, and make sure to prepare for some questions, because it keeps me occupied during the live stream. I love answering questions. Very important that we have someone in the space like myself, not trying to boast, but it's just coming out of my mouth, freestyling here. So like myself, answering questions, because I know that when I was, not in the YouTube game, I was definitely out there putting some questions in live streams and not getting answered very often. Doesn't really feel too good. So I'll try to answer as many questions as possible. Come and join me in that live stream tomorrow, and I'm excited for it. So let's get into Twitter without further ado. Now, on Twitter, at the end of every video, I like to look into Twitter briefly, look into crypto Twitter, see what's going on. Now, we have Roman Trading, and I just wanted to give a quick shout out to this dude. Highly recommend him. He's one of the few analysts out there, in my opinion, who has been kind of saying it as it is for a decent period of time, right, since November. He's looked at the data. He hasn't been concerned with engagement. He hasn't been concerned with how much followers he gets for what he says. And right now he's saying it again, right? He's saying the DXY is on a parabolic rise from last year's lows. He says $105 is a critical resistance level that stretches back to the 1970s. He says break it and all asset classes will feel pain. Fundamentally and technically, the dollar is bullish, and which is bearish for Bitcoin and cryptocurrency. Obviously, this is 100% correct. It's exactly what I said in this video. Fundamentally, right, in terms of interest rates rising, people wanting to get out of risk on assets, the dollar is very bullish. The DXY will go up because of that. And technically, it's very bullish because it's breaking out of structures left, right, and center on the chart, right? That is not good for Bitcoin. That's just the reality of the situation. Another tweet I wanted to bring up here was a quick shout out to myself, I guess. This is referring to a tweet I posted on November 17th when Bitcoin was at 60K. I said on November 17th, I don't think people calling for 53K understand the severity of the current situation for Bitcoin. Now, at 58K, a lot of the perma bulls were saying, we need to retest 53K and then we can go up. I thought it was ridiculous, and so I said, I don't think that's logical. I said that 58K should be seen as the last resort here, and that 58K is an excellent bouncing zone. I said 53K is the absolute last resort, but ultimately, that the day after this was kind of posted, I said, Bitcoin's in a bear market for the first time. We lost 58K. It was over. And hence, I proclaimed that as one of the first people in the cryptocurrency space. Now, a lot of people say that they were bearish up there. But I actually was, right? There's a big difference there, because a lot of people would point to one tweet they made out of the 300 tweets they made during that region that was slightly bearish, and be like, look guys, I said it was a bear market, but I was actively calling it a bear market. You can go back and watch my videos during that time period and see it for yourself. I've got nothing to hide there, hence why I leave all the content up. So just wanted to show you guys that. A lot of people question me a bit when it comes to that. They say, well, but you were calling for 100K, and it's like, yeah, I was calling for 100K, but then I said, I'm not calling for 100K anymore. It's a bear market. So why does it matter? Change my prediction. That's all about adapting in the market. And so without further ado, I think I'll end the video there. Pretty long video. All good though. Excited for the live stream tomorrow. First one in 2 months. I hope to catch you guys there. Thanks for watching, and I'll catch you in the next one. Cheers.